Have you ever had traders tell you that they take trades of a risk to reward ratio of 1:20 or 1:10 or 1:9 or 1:6 and more, and you wonder, how is this actually done? How can I have a high risk to reward ratio trades? Okay, and how can I have smart money sniper entry trades? So that is what I want to show you today. It's not actually as complex as you think. So I want to share with you, I want to expose to you how you can get sniper entry trades while trading demand and supply zones or smart money concepts. How to get smart money sniper entries. Sniper entries. So what are actually sniper entries? Sniper entries or sniper entry in a trade is when you take a trade with little or no drawdown. That is sniper entry. When you take trades with very little or no drawdowns, that is sniper entry. So what I actually call it precision entry. Okay, it can also be called precision entry or surgical precision entry, in the sense that you take trades with little or no drawdowns. Once you enter the sell trade, it is actually selling immediately. Once you enter a buy trade, it's actually buying immediately. So that is a precision entry, and there are a lot of advantage of having sniper entry. There are a lot of advantages involved when you take sniper entry. Let us see the advantages. One of the advantages of having a sniper entry, know how to take sniper entry, is that you have higher risk to reward ratio. Okay, you have higher risk to reward ratio. As a smart money trader also, or a demand and supply traders, you are taking trades of mostly above 1:3 risk to reward ratio and above. 1:6, 1:9, 1:10. Now, what does this mean? It means that you are risking whatever thing you are risking, you are making like 3 times whatever thing you are risking. If you are risking if you are doing a 1:3 risk to reward ratio, when you are doing 1:6 risk to reward ratio, it means that if you are risking 1% on an account, you are making like 6% on that account. If you are risking if you have 1:9 risk to reward ratio, it means that you are risking one portion of your account, or a portion of your account, which could most times advise 1% of your account is a standard in the industry. 1% of your account, you are making like times 9, which is 9 times whatever thing you are losing. You risk losing. All right. If you are doing a 1:10 risk to reward ratio, it means that you have a chance of getting 10 times whatever as profit when you are risking 1% of your account, which is called 1R. All right. So this is the first advantage of knowing how to do the smart sniper entry trades. The second advantage of knowing how to do the sniper entry trades is that it helps you to grow your account faster. Okay, faster account growth. All right. So once you are risking a portion to make multiple portions in profit, your account tends to grow faster, more than a person who risks maybe 1:2, who does 1:2 risk to reward ratio. You stand a chance of growing your account faster. It is faster. There's a potential for growing your account faster. The third reason why you should know how to do the sniper entry trade is that you make more profit. You have stand a chance of making more profit using very little risk. Okay, little risk. So you stand a chance of making more profit by taking very, very little risk. You don't have to risk a very large stake in your account. There are traders that actually risk 5% on their accounts with the aim of making just another 5%. 1:1 risk to reward ratio. They risk just 1% of 5% of their account to make another 5% on their account, which is a 1:1 risk to reward ratio. And I've also seen traders that risk 10% of their account in order to make another 10%. which is another 1:1 is risk reward ratio. You don't actually have to risk 10% of your account per trade. You don't actually have to. If you risk 10% of your account per trade, you just need 10 trades, 10 losses in a row to wipe that account, to blow that account. All right. If you are risking 5% of your account, you just need 20 trades and your account is blown. But when you risk 1% of your account and you make even more, like 3% or 4% or 5% or 6% or 7% or 10%, using the means of sniper entry, you stand a chance of growing your account faster without putting your entire account at risk. All right, so I'll be showing you in a while how to get sniper entry to trades, which is very, very vital. All right, so before you know how to do the sniper entry to trades, you need to understand there are some prerequisites, some conditions, there are some knowledge, there are some pre-knowledge you need to get. Some pre-knowledge you need to get. Some pre-knowledge. There's some pre-knowledge you need to get in order to be able to know how to do the sniper entries. And I've covered this knowledge gap in this YouTube channel. I've got a lot of videos I've put in this YouTube channel that will cover this knowledge gap for you. And I'll be linking those videos in the description box of this video. The first thing you need to know how to identify your demand and supply zone. All right, because I am a demand and supply zone trader. A demand and supply zone is nothing more. Is same as the smart money concept. Just that in a smart money concept, there are some additional knowledge aspect that is being added to the demand and supply trading. All right, the smart money concept is an advanced demand and supply trading. Smart money concept trading is nothing more or less than a demand and supply trading that is an advanced stage. All right, so there are some concepts that is being added that will boost your demand and supply trading, like the liquidity, understanding the principle of liquidity, understanding the principle of liquidity, of inducement. Okay, understanding the principle of there are several other principles. Okay, that I may not be able to mention right now, but I've covered many of them in this YouTube channel. All right, for time's sake. All right, so I don't want to make this video too long. Okay, so you need to also know, second thing also you need to know, when you've known how to identify demand and supply zone, you ordinarily know that your demand zone is a buy zone. All right, you should know this, that your demand zone is a buy zone, your supply zone is a sell zone. Demand zone is a zone from where you buy from. All right, it's a zone you buy from, whereby the smart money traders, or rather the hedge funds and institutional traders, are looking up to buy from the demand zone. All right, so your supply zone is a sell zone. You need to know that. I've made videos on that, so I'll be linking them in the description box of it. I don't want to make this video too long. Now, the second thing you need to know, pre-knowledge you need to know in order to know how to do the sniper entry, is you need to understand the principle of market structure. This is very key. You need to understand the principle of market structure. Market structure is just a way of telling you the market trend. All right, it's another way of saying the market trend. For newbie traders, or for layman trader, we call it the market trend. We call it a bullish trend or a bearish trend. But in a smart money concept trading, we call it market structure, or the order flow, Because in the market structure or the order flow, the bullish market structure or the bearish market structure. And for a bullish market structure, the market is making higher highs and higher lows. For a bearish market structure, the market is making lower highs and lower lows. All right, the market is making higher highs and higher lows. In a bullish market structure, in a bearish market structure, the market is making lower lows and lower highs. You can see this is a bullish market structure. The bullish market structure, the market is making higher highs, higher low, higher highs, higher low, higher highs, higher low. You need to understand this concept: higher highs, higher low. In a bearish market structure, the market is making lower highs, lower highs, lower lows. Okay, like this: lower low, lower high, lower low, lower high. This is a bearish market structure, and this is a bullish market structure. I have explained this concept in a separate video, which I have linked in the description box of this video. You need to understand this. You cannot be a good smart money trader without understanding the principle of the market structure or the order flow. All right. The third concept you need to understand before you can know how to do the sniper entries to trade is you need to understand the smart money entry confirmation method. All right. It's called the smart money entry confirmation method. And if you have been following this YouTube channel, I have always emphasized that there are two types of entry confirmation. The two types of entries to trade. The first entry is what we call the limit order entry. What happens is that you just place limit order at your demand zone or your supply zone, hoping that price will activate your limit order and sell, and your stop loss is placed just right above the supply zone, or right below, few pips below the demand zone. All right, and there are several disadvantages of the limit order entry method because you actually use a confirmation. There's no confirmation, but the entry confirmation method, the confirmation entry method, you look for some form of entry signal. You look for some form of entry signal, or rather some form of sign that show that the market actually want to buy or actually want to sell. All right, so that is it. I've done a previous video on the principle of entry confirmation method. I've done a previous video on that, and I'm going to be linking that in the description box of this video in order not to make this video too long. All right, so I'm not going to be going into that in detail. I've made a separate video on entry confirmation of smart money trading or demand and supply trading. All right, so the fourth thing you need to understand when you want to know how to do the sniper entry to trade is you need to understand the principle of entry refinement. Entry refinement. All right, entry refinement is not exactly the same as entry confirmation. All right, let me explain. Now, for entry confirmation, let's assume you have a supply zone right here. All right, and this is your H1 time frame. Now, we're expecting that price comes to this zone and sell. All right, that is our expectation. So the smart money entry confirmation method would require that you would want price to buy up to the zone, up to the supply zone. This is your supply zone. So you want price to come to the zone, break structure, which we call the change of character, and then the market returns to the order block that caused a change of character, which is called return to order block. This is our entry confirmation, and you now sell down the market. All right, this is called entry confirmation method of the smart money. Now I got this confirmation where on the same time frame, which is the H1 time frame. If I got the setup on a M30, which is a 30 minutes time frame, I could have as well gotten my entry confirmation on M30. If I have gotten this setup on H4, I could have as well gotten my entry confirmation on H4 time frame. All right, that is the entry confirmation method. It's not a must that I have to step down to a lower time frame. If I have gotten this setup on a 15-minute time frame, I could have as well gotten my entry confirmation on the 15 minutes time frame. This is for a supply zone. Let us see for a demand zone. For a demand zone, you have the market creates a demand zone. Market creates a demand zone right here, and we are looking at the market to come back to the zone to mitigate the zone. The concept of mitigation, I've explained it when I discussed about market structure in the description box of the video. There's a video on that. So now the market creates lower lows and lower highs and comes into the zone and breaks structure to the upside, giving us the change of character right here. And now there's a return to order block from here, and you buy up. So this is the flip side of the entry confirmation. If this were, this was going to be 30 minutes time frame or 15 minutes time frame or even H1 time frame, I could have as well gotten my entry confirmation on the same time frame. Are you with me? So this is the entry confirmation method of the smart money concept trading or the demand and supply trading. Now, a step higher. How do you get your sniper entry? Now, sniper entry can simply be gotten by the principle of entry refinement. Sniper entries to trade, smart money trading sniper entries to trade can be gotten by the principle of entry refinement. And what do I mean by entry refinement? Entry refinement is the concept whereby you have your setup time frame and your entry time frame. How do I mean? You see a setup on H1 time frame, a demand or supply zone on H1 time frame. Now you can as well, when you see this setup, to get your entry, you can step down to 15 minutes time frame. You wait, you get a smart money entry confirmation method on 15 minutes time frame. Maybe it was a buy, let's say a demand zone. Now the price comes to your demand zone on H1 time frame. Now you step down to 15 minutes time frame, gets a positive, you get a positive feedback, a positive sign of entry. Now after you've gotten a positive sign of entry, you further step down again to your M1, your 1 minute time frame, to also look for another entry confirmation to the trade. Now I could have as well entered this trade on a H1 time frame, but the difference is that my stop loss will be perhaps higher, maybe 30 to 50 pips stop loss. And when I have 30 to 50 pips stop loss, my risk to reward ratio could be high. Could be low. In the sense that I could maybe do 1:1, 1:2, or 1:3 risk to reward ratio. Now, when I step down to 15 minutes time frame and further refine my entry, I can maybe get a stop loss of maybe perhaps 10 to 20 pips stop loss, and my risk to reward ratio will increase, possibly 1:3 or more risk to reward ratio. But when I further step down to 1 minute time frame, my risk to reward, my stop loss would reduce, perhaps 2 to 5 pips stop loss, and my risk to reward ratio would drastically go up. It could even could maybe from 1:6 or even 1:10 or more. This is the principle of entry refinements to trade. The same trade but different time frame of entry. The same trade but cascading down to a lower time frame and getting my requisite entry confirmation in order to maximize my to reduce my stop loss distance and to increase my risk to reward ratio. Now let me show you what I mean. Let me draw what I mean. I'm going to go into the chart in a while. I'm going to show you a chart example of what I actually mean in a while. Just stay with me on this. This is one of the most important concepts you should learn if you want to grow your account, all right, without taking much risk. Now let me show you what I mean. Let me use a demand zone to show you what I mean. Now see, let's say you have a demand zone right here like this. This is let's say this is a H1 time frame, and we are expecting that price comes to the demand zone right here. Now once price comes to the demand zone, we are looking for what is called, as you're aware, the change of character. Market changes character right here. This is our H1 change of character. H1 change of character. H1 change of character. Now, if I should get into the trade here, by using this H1 zone, demand zone, my stop loss here, my stop loss distance could be up to like 30 to 50 pips stop loss. All right, 30 to 50 pips stop loss. I'm taking all this zone, this demand zone, the entire demand zone could be up to 30 to 50 pips stop loss, which is high. So if I'm taking 30 to 50 pips, that means I have like 1:2 risk to reward ratio, which is not too good for me, and it might take a lot of time for my trade to hit final TP. But so what do? I can as well step down to 15 minutes, and here, can you see what I'm drawing here? So I've got my entry confirmation, and as well step down right here to 15 minutes, and here, this is now my 15 minutes time frame, step down, 15 minutes time frame. And I would want price to come back again to my 15 minutes. This 15 minutes, M15. Just stay. we're gonna go into the chart. I'm gonna show you a chart example of what I'm trying to depict. All right, I'll show you a chart. This 15 minutes time frame. So demand, that is a miniature taken out from the 1 hour time frame. Now price comes to my 15 minutes time frame. I wait for price to come to my 15 minutes time frame. 5 comes to the price now comes to my 15 minutes time frame. And if I'm to take this trade off my 15 minutes time frame, my stop loss could be perhaps 20, let's say 15, let's say 15 or 15 to 20 or 30 pips. All right, 15 to 30 pips stop loss. All right, so if I'm taking 15 or let's say 20 pips stop loss, I can make like this 20 pips stop loss. Let's say 20 pips stop loss. I can make like 1:3 risk to reward ratio on this trade. So, and getting into this trade, I'll look for my change of character right here on my 15 minutes time frame, and you can see before I now wait for the return to order block before I'll get into the trade. So 15 minutes time frame, I'm making like 1:3 risk to reward ratio if I'm taking the trade off the 15 minutes time frame a demand zone. All right, so now, but if I want to have the trade, I've refined this trade now from H1 time frame to 15 minutes time frame. If I want to further refine this trade to make a higher, to get a sniper entry, all right, and trade refinement. Now I would go down. I will now, when I have the break of structure to the upside or the change of character, I'll step down to my 1 minute time frame. I want the price. I want to take this trade off my 1 minute time frame. I'll now see my 1 minute time frame zone, right here, and I'll wait for price to come to my 1 minute time frame here. And if I'm taking it off my 1 minute time frame, I should be having like 2 to 5 pips. All right, 2 to 5 pips, and then I wait for my change of character, 1 minute time frame change of character, and I'll now get into the trade right here up. So my profit target will still be on the H1. My profit target will still be on the H1 zone. All right, so, and this is 2 to 5 pips stop loss. So I have refined this trade entry from H1 to M15 to M1. All right, and taking this stop loss, reducing this stop loss from potentially 30 to 50 pips down to 2 to 5 pips, and with a surgical precision entry. Now this is for a demand zone. Let me show you for a supply zone. For a supply zone, you have something like this. For a supply zone, you have maybe like a rally based drop supply zone, and this could be your H1 time frame, and you have your entry confirmation, which is change of character, and then you want to refine down to 15 minutes time frame, and now you have your entry confirmation on 15 minutes, but you are not satisfied. You want down to refine that entry again to 1 minute time frame. Even there are some traders that take it down to 30 seconds, all right, to seconds time frame, but I don't do that. The lowest time frame I trade is the 1 minute time frame. I don't go into seconds time frame. There are some traders that still further go down to to seconds time frame. So now this is H1 supply, M15 supply. This could be also MBM30 if you wish. This could be H4 if you wish. All right. So now taking it down to 1 minute time frame. So you still go down and get your entry confirmation on 1 minute time frame, and you sell down. You still have your same your profit target is still on the H1 profit target. So you are having your 1:6 or 1:10 or even 1:20. All right, even 1:20 risk to reward ratio. All right, this is powerful. So now let us go to the chart. Now there's a recent trade we took. We took this trade this week. Even today, we saw that trade that we took today on AUD USD. All right, Australian dollar, United States dollar. Okay, look at the trade. Can you see this trade? This trade was a wonderful trade. I made this trade. We made so much money on our YouTube, on our Telegram channel. Or if you're not on our Telegram channel, please join our Telegram channel. I posted this chart analysis. I don't post signals in terms of points, 0.3 points and all that. I share chart analysis clear. I post chart analysis telling you this is where we're looking at selling from, this is where we're looking to buy from. All right, if you're not in our Telegram channel, please, you are doing yourself a disservice. If you're not in our Telegram channel, you are doing yourself a disservice. The link to our Telegram channel is in the description box of this YouTube channel, or this YouTube video. Also is in the profile section of this YouTube channel. Please kindly join our Telegram channel because I post free chart analysis there almost every day. So traders, I posted this chart analysis in our free Telegram channel. I said that the market the market at this point, it was like this. I said that the market was gonna come to this zone and sell. This is what I said. If you go to this Telegram channel, you're gonna see it. All right, go to our Telegram channel. You're gonna see this setup on AUD USD. How that I posted this channel, this setup. All these ones were not here. All these ones were not here when I posted this trade. But you see how the market respected my zone, came to my zone and sold. What happened is that the market took out liquidity. The market took out this liquidity right here. The market took out this liquidity right here. This liquidity pool took out this liquidity, broke structure, and now sold. So this setup is a wonderful setup. So now this is a 30-minute setup. Can you see? This is a 30-minute setup. This is a 30-minute zone. But some traders could have taken this trade and made like this zone could be up to like 20 pips. Okay, but some traders could have as well held this trade down here, and this is approximately let's say 60 pips. So it's like 1:3 risk to reward ratio, approximately 1:3 risk, or 1:4 1:3 risk to reward ratio on average. But another trader could have as well this same trade that you did 1:3 risk to reward ratio. Another trader could have as well done one. This is potentially a 1:20 risk to reward ratio trade. If you had risked $1,000 on this trade, you could have as well made $20,000 on this trade, because this is a potentially 1:20. risk to reward ratio trade. All right, if you know the principle of sniper entries to trade, or the principle of smart money entry to trade. Now, I don't spoon food. I don't spoon feed my mentees. I don't spoon feed my mentees. I teach you how to fish. I don't give you fish. What do? I train you. This training, I train you. I give you educational content, telling you how to actually do this. I won't tell you enter at 1 point, 0.66 stop loss 5.111 and take profit 0 and all that's rubbish. All right, that's not how to grow as a trader. How to grow as a trader is to know this is where to get into the trade, look for your entry confirmations and strike, get into the trade. All right, so now how do we enter this trade? Now let me show you the entry. Let me show you when an M30 time frame. Now let us step down to M5. Let us step down to M5. Let's step down to M5. Our focus here is to see what actually happened right here. How do we refine this entry? How do we refine this entry right here? That is what I want to show you. Let's step down to 5 minutes time frame. Okay, 5 minutes time frame of that same trade. Now you can see on a 5 minutes time frame, the market actually broke structure right here. The market broke structure right here. So this is our 5 minutes change of character. The market broke structure right here. You can see this is a bearish candle. The market broke structure right here. By this candle broke structure. Market broke structure right here. And now buy up. This is our 5 minutes 5 minutes supply zone. So this is like 5 pips, not up to 10 pips, between 5 to 10 pips. Okay, but this entire M30 zone could be like 20 to 30 pips. Okay, so you can see now we've refined this to 5 to 10 pips. All right, 5 to 10 pips here. Now if you step further to your, let me mark it before we step down. We want to step down to 1 minute time frame. We're going to step down to 1 minute time frame. So this is the zone. This is the zone. All right, so we want to step down to 1 minute time frame. Let me also mark where the change of character happened. Change of character happened right here happened right here on M30 on an M5 time frame. All right, so now let us step down to M1. Let's step down to M1 on this same trade. All right, so in that M5 you could get up to 1:6 risk to reward ratio. All right, you could get up to 1:6 risk to reward ratio. I'm trying to get to that trade now. Good. Let us see. This is the M1 time frame. All right, this is the M1 time frame. You can see this is your these are M5 zone. All right, these are M5 zone, but I want us to go down further to refine this trade in M15 in M1. So what do we do? You can see the break of structure right here. The break of structure happened right here. All right, so the market, where is the structure that broke? Where is the zone? All right, yeah, where is the zone that broke structure to the downside or across the change of character? Is this one right here. Sorry, is this one right here. This one right here. So here. So this zone. So now the market, we have a new zone right here, and the market bought up to that zone, came right down and gave us a miniature zone right here from where the market now sold. I don't know if you get a concept. Let us start afresh. Let's start afresh. Now, so it can be clearer, this is our M15 or M5 breakout structure. M5 breakout structure giving us a zone right here. This is a zone. This is a zone that caused the breakout structure. Now, if I step down to 1 minute time frame, you can see that there is another. This is a miniature zone, 1 minute time frame zone. There's a breakout structure that happened right here, and this is a miniature zone that caused the breakout structure. So I'm
looking at having the market come right impact into that zone. This zone in M5 could be up to like 5 pips, as I said, but this miniature 1 minute time frame zone could be like 2 pips, 2 to 3 pips. Now, this is my stop loss right here. So imagine my profit. I'm entering right at the return to order block right here. Imagine my profit potentials. This could be up to 1:20. Let me just depict this. So you can see my M1 zone. Can you see my M1 zone? So you can see now, this is my M1 zone right here. You can see this is like 1 to 3 pips, and you can see the profit potential on this trade. The profit potential, this is up to 1:20. So this is a sniper entry. This is the principle of sniper entry. By having my entry refinement, I would have succeeded in increasing my risk to reward ratio. My risk to reward ratio has been increased to 1:20 or more. But you have to be patient. If you're not patient enough, you will not be able to refine this trade. Or if you don't have the time, maybe you are a busy trader, if you don't have the time to wait for, or the patience to wait for a lower time frame refinement, you might not cash this large setup. All right, you see how different traders would have taken this same trade I shared in the Signal free Telegram chart analysis group. Different traders, same trade, but various traders would have made various amounts of money in this same trade. All right, by using the knowledge of entry confirmation method, or the trade refinement method. All right, so currently in my mentorship group, I have, in my personal one-on-one mentorship, I have several traders I'm mentoring. All right, if you want me to mentor you one-on-one, I don't do collective mentorship, I do one-on-one mentorship. You want me to train, this is a fraction of what I will teach you in my mentorship class. This is just a fraction of what I'm going to teach you in my one-on-one mentorship. I will teach you concepts that will help you to become a profitable trader for life. There are several traders currently under my tutelage, and I do one-on-one mentorship. Why I do one-on-one mentorship is because I know that several traders have different learning curve, and I will identify your deficiency in trade. Even if you are a trader, even if you have been trading the forex market for the past 10 years or 20 years, I can still help you. All right, but you have been trading for years, but you are still a struggling trader. I can help to brush you up and help you identify your deficiencies and close the knowledge gap that you have, and mentor you, take you by the hands until you become a profitable forex. That is my goal, until you become a profitable forex trader. All right, so it's one-on-one. All right, so you wanted me to mentor you. My contact detail is in my free Telegram channel, and my contact detail is in that channel. Do me a DM, and we can start this mentorship immediately. All right, get this knowledge first. Once you have the knowledge, once you learn the skill, once you learn your craft, money will be a byproduct. Don't look for money first. The first thing you need to do is to get this knowledge. Or if you want to get into trades and all that without getting mentored, you lose that money to the market. But when you pay a token, okay, to learn and to get a skill, money will be a byproduct. Money will start flowing in. All right, so I want to encourage you to contact me. Let me help you. If you're here to join our free Telegram channel, The link to that group is in the description box of this video or the profile section of this YouTube channel. So till I come your way next time, I am Emeka, telling you do have a wonderful day ahead, and God bless you. Bye.